You are now listening to The Drowsy Trader. Before we begin, would you do something for me? In the comments, tell me what time it is for you and where in the world you're listening from. I read every one, and I always wonder, who's out there sharing this quiet moment with me? If these stories help you slow down, or reflect, or sleep a little easier, consider liking or subscribing, but only if it truly brings you peace. Now, close your eyes. Tonight, you are not yourself. You are a manager at Citadel. It is January 28th, 2021. The air is cold. The world is watching. And GameStop, yes, that GameStop, is tearing through every model you've ever trusted. Your monitors are glowing. The borrow rates are climbing. And the phones will not stop ringing. Your job? To manage risk, to calm panic, to keep a billion-dollar machine from snapping in half. This is a day of frayed nerves and broken assumptions, of whispered calls, compliance logs, and reputations on the line. A day when retail traders storm the walls, and you wonder if the system was ever as stable as it seemed. But it's also a night of quiet reckoning, when the headlines fade, and you're left alone with your thoughts, asking what really broke, and what still might. Let go. Let the stillness begin. The Drowsy Trader presents Working at Citadel the Day GameStop Broke the System. The monitors never sleep. You wake at 5:12 a.m., not to your alarm, but to a cascade of red alerts on your Bloomberg terminal and the sound of incoming Slack pings. The risk channel is on fire. GME up 50% pre-market. Retail flow volumes via Robinhood at 39% spike. And Citadel flow share hitting 47%. You sit up, heart ticking in rhythm with the flashing numbers. Something in the air feels different. Not dangerous yet, just heavier. You pull a stale coffee from the mini fridge and settle into your office chair. In cryptic fashion, an internal message from the borrow desk scrolls by. Melvin margin utilization exceeds 80%. You know what that means. The fund's losing big, fast, and Citadel is now on the T-sheet. You refresh your risk dashboard. The VAR model is broken. The system is straining under speed, not structure. You open Slack to the Order Flow Alerts channel and mute it quickly. There's a Slack notification. Retail dominates flow today. You read on. Robinhood routing up 39%. On GME, AMC, BB. Every screen on your desk reflects chaos, charts jagged, poking into volume records. You push off the keyboard. This morning plays like a hypothesis you didn't ask to test, and already you feel the ground shifting. You check your email. A memo from compliance lands bluntly. Do not deviate from models unless reviewed. You sigh. The models are already failing. Internal chatter confirms it. Spreads are widening. Liquidity is evaporating. And worst of all, retail isn't selling. You're not just making trades anymore. You're trying to hold a structure that refuses to hold. You remind yourself, Citadel Securities processed nearly half of all U.S. retail volume during this squeeze. That anchor feels weighty now. Robinhood's payment for order flow brings hundreds of millions per quarter your way. But today, it feels like leverage in someone else's storm. Models are built for normal, not mania, and today feels very far from normal. You glance at a consortium of screens showing price. GME, $350. The bid/ask spread is unhinged. You whisper into the quiet room. This can't go on. You recall warnings you flagged. Options skew inverted. borrow rate breach possible. All of them flashing now in red. You pull the chart back to 5-year view. A spike so vertical, it's almost obscene. A small ping echoes in your ear. The Slack group, Crisis Ops, just pinged you personally. All hands to war room, 6:45 a.m. You rub your eyes. You never wanted this day, but you've trained for it. Now, the day trains you. You walk through Citadel's silent hallways toward the war room. Each step feels measured, purposeful. The lights overhead hum in expectation. You enter the war room. The only sound is the hum of monitors and frigid air from the ventilation. People glance, whisper. Screens show live quotes, client exposures, and internal hedges that are bleeding. You take your seat, adjust your tie, and take out your notebook. Today will require running with the herd and maybe leaping in front of it in time. The head of ops speaks softly, urgency under calm. We're dealing with 53% drawdown on Melvin in just days. Today we're their capital provider. You nod quietly. You know every trader sees the impact before the press does. Today, Citadel has skin in the story, and you're part of the risk decision pathway. Your fingers hover above the keys. You were trained to hold calm, to speak last. The team runs through models, stress scenarios, and worst-case spreads. You realize the illusion of control is unraveling through live wires. Now the arc must bend from calm to rupture, because you already feel that shift inside you. At 6:12 a.m., the war room lead notices thin volume in dark pools and gasps. Borrow demand on GME exceeding supply, even overnight. You sit, frozen. There's no tape, no liquidity. The world is buying every tick down, and no one is selling. Moments like this weren't in your risk playbook. You pull up the internal ledger. Melvin's account running red ticks in 6-figure increments. Citadel now has lines open, internal hedges bleeding. You think about the models advising to scale down. No one is scaling. They are buying more. You breathe in slowly and out. You open Slack one last time before the open. You type, "Heads up, watch NSCC collateral jumps. Possible halts incoming," but you don't click send yet, because you know even advice can become narrative. Control slips when perception becomes suspicion. You close the app. At 6:45 a.m., the war room door opens and the COO enters. The room goes quiet. She looks not at screens, but at faces. Tired, drained, wired. She says, "Good. We brief every desk in 5. We follow models. We stay disciplined." You nod. You swallow. Your voice is steady. But inside, you feel history pressing a hand to your shoulder. This is not trading anymore. This is theater. You glance at the clock. 7 a.m. The minute hand quivers toward 9:30. Opening bell. Your heart slows with training. You know what comes next. Black ink or red fire. There's no half measure. You breathe once more. Calm your cursor. The screen before you is blank space waiting for a trade that may never materialize. But the story is already written. In red flow, margin calls, sleepless risk. You look up, toward the window. Manhattan is still dark outside, unaware of the day's gravity. You are not afraid yet, but you are awake. The war room hums with cold purpose. Screens display whispered numbers. Melvin down $1.2 billion today. Drawdown now 48% year-to-date. This isn't collateral, it's gravity. Citadel and Point72 agreed to inject $2.75 billion into Melvin just hours ago. A desperate bid to stabilize a fund now hemorrhaging in real time. You feel each red tick not on your account, but in your gut. Because Melvin's survival means Citadel's exposure rising, stakes suddenly existential. The briefing begins. The COO stands at the head of the table, calm but bright-eyed, recounting the exact timeline. Borrow rates surged. Retail refused to sell. Short covering closed tightly. And Melvin's position screamed margin calls. Traders shift uncomfortably in their seats. Risk models blinking cancellations. Strategist teams murmuring. You're told politely, we're now collateral for their risk. Any secondary meltdown draws universal risk exposure. The gravity isn't hypothetical. It's on your desk, live. You review the inter-firm exposure sheet. Melvin's account is massive, representing nearly 15% of Citadel's prime brokerage credit exposure. You are risk manager, not gambler. But today the threshold bends. You know this could implode further. You tap a note. Signal to risk desk. Prepare second collateral liquidity line if GME goes above $450. You whisper it under your breath, still not allowed to speak out loud. A Slack ping appears in the compliance channel. Watch public narrative. Use only factual data. It's terse. Regulatory scrutiny is imminent. Congress already when live broadcasts and hedge funds are under the spotlight. Citadel's name is trending with Robinhood and Melvin in every tweet thread. The analysts on CNN are using weaponized Reddit, and the internal PR team is drafting emergency memos quoting FCC laws. You realize, today's story won't wait for truthful nuance. You shift to the risk dashboard just in time. Borrow utilization across meme stocks at 92%, split across retail brokers, prime desks, and dark pools. Melvin's borrow is almost maxed. You imagine the repo desk dialing in panic. Every tick higher means deeper exposure, and you recognize this is beyond finance now. It's chemistry, retail flame-throwing forces at Wall Street's structure and changing everything live. Your phone vibrates with a discreet message from a trader friend. This is bigger than muddy waters, move up the chain. You press mute, swallow hard. You glance around war room faces, composed, still, while internal alarms echo. One of your desks looks up, voice low. Ken Griffin is en route. The head of Ops nods. Silence tightens. The presence of the founder means seriousness when words aren't enough. Lobby blinds rustle faintly behind you. Citadel's base on the 50th floor feels less lofty suddenly. The next message arrives. Melvin losses outpace their capital at $6.6 billion mark. You run new scenarios. A single halved GME price drop erases more collateral, and Citadel is first in line for clearing exposure. Now you realize your firm doesn't just manage risk, it secretly absorbs it. You remind yourself, models never broke this hard in books. 8 a.m. blinks on your watch. The pre-market frenzy transitions to official open in under 2 hours. If Melvin fails, credit lines tighten across prime broker platforms. Systemic spillovers cascade, yet your role isn't emotional, it's procedural. You walk through soft analytics reports, stress tests, and emergency number maps. You think, this is where macro meets micro, a retail rebellion shaking up the architecture of finance. The war room lead issues a directive, update action plan. If borrow hits 100%, cut risk. If public mentions cross 50K on X, escalate PR. You stare. Cross 50K. Internal jargon for media volume threshold. Triggers email brigade to senators. You rub your temples. Twitter, no. X mentions at that level mean political momentum. You're no longer managing risk. You're babysitting public narrative. You take a sip of water. You recall cherry-picked breakfast from the mini cafe. Cold sandwich untouched. Now, it feels remote. The color on your screen flickers. GME printing at $400. Orders stacking off-screen. Institutional desks see hedge funds shifting. You think of the broader implication. If retail can move the largest short interest in history, what else is possible tomorrow? But there is no time to ponder broader philosophical shifts. This is immediate. Your phone offers a quiet ping, meeting at 8:20 a.m. with Citadel CEO to brief status. The invitation reads, "Only high level." You know that means metrics, collateral flow, and no blame. You stand, stretch, cross to the window. The sun is lighting up Manhattan already, but it contrasts sharply with internal storm clouds. Outside is calming normal, commuters, vendors, traffic. But inside Citadel is perched on invisible fault lines. You take a deep breath, exhale slowly, and return to the table. 7 analysts occupy trading consoles around the room, staring with quiet intensity. A collective realization has settled. Today feels bigger than money. Everything hinges on the next few hours. As you watch the live borrower heat map, you know the illusion of control is evaporating fast. And you are part of the machine, powerful, vulnerable, responsible for what is about to follow. Your role wasn't to predict the collapse, it was to manage through it. Now, the collapse isn't hypothetical, it's here. You focus on the open and pray this system holds. The war room shifts like tectonic plates. Screens reveal widening bid-ask spreads. GME sits at $420, yet volume is erratic. Fills bounce at odd ticks. Partial executions cough out error codes. You pull up internal flow data. Citadel now manages approximately 47% of all US-listed retail volume, most routed through Robinhood's pipeline. That anchor feels like shackles. Market structure was built for gradual risk, not chaos by mean-driven retail contortion. You open your liquidity dashboard. Overlay shows borrow rates spiking to levels no budget allowed. Internal messages flash. Borrow desk, no more available. 95% utilization across GME borrow. You realize positions can't close. Cooler voices mention dark pools also drying. In whispered tones you confirm, there is no exit, no stop orders, just buyers overwhelming sellers. Corporate chatter flags a debug. Your gamma hedging algorithm hit dead zones. Volatility skew inverted. Models refuse to price further moves. One trader says algo booked wrong prints. Auto hedge doubled size. You kill it manually. It's the first time all year. You think this environment isn't rational. It's a physics experiment gone live. Citations to retail frenzy don't land here. Instead, you watch internal order books collapse. No one's selling into strength, a desk says. Retail holds the line. Citadel's system is supposed to absorb flow, not amplify it. But today, it's the pump. Retail post after post on r/Wall Street Bets mirrored circulating explanation. Collective action and high engagement forecast surges, not only trades. You wonder, did their cohesion outmatch your capital? At 8:35 a.m., your system alerts hit. NSCC clearance threshold warning. GME exposure could push Robinhood's collateral requirement above $3.7 billion. The room shifts. Realization dawns. They might default on settlement if trading continues. Robinhood's defenses break first. You scan the memo. NSCC raised deposit from $700 million to $3.7 billion within hours. Your chest tightens. Market tension is now institutional. Trade desks now call. Melvin exposure is now greater than 90% of available borrow. Reuters updates hit. Cumulative retail volume on GME topped 175 million shares January 25th, second highest ever. Models break. Human oversight fails. Risk feels like a bucket riddled with holes. Your desk's internal compliance channel pings fast. Hedge adjustments paused. Orders manually vetted. No new exposure. You nod. Integration is failing. Citadel is supposed to be the firewall, but now you're patching bullet holes mid-battle. You glance at GME price. $445 jumping again. A colleague hits muted alarm. Gamma gamma risk alert. Volume skew neck break. You catch your breath. The system you rely on, built for microstructure drift, is being deprecated by multitudes, chanting "hold the line" on anonymity and adrenaline. This isn't servicing orders. It's surviving a siege. Overlay ticker shows retail sentiment trending upward on X, with hashtags like #CitadelRigged and #FreeMarketNotFree. Internal PR flags that volume. Over 50,000 posts mention Citadel in 3 minutes. A political tempest is forming. This isn't trading chaos. It's reputational entropy. You mute all Slack channels except Crisis Ops. A message arrives. Check DTCC fallback liquidity options. But fallback needs time, at least 2 days settlement. And in 2 days, volatility could erase your assumptions. The algorithm can't price that kind of event. The only constant now is uncertainty. At 9 a.m., 30 minutes before open, you review new data. Short interest in GME was roughly 140% of float. That means every share shorted either relent and resold or potentially manipulated. Institutional players were squeezed. Retail remained faceless, yet terrifying potent. You realize the short squeeze isn't a theory. It's happening live beneath your systems. Your eyes move from screens to faces around the table. Traders tapped phones, risk analysts stared into ERDID monitors, and compliance reps kept silent. You are the institution. You're powering the pipes. Yet the street flows are overpowering. Today, you realize platforms, capital, and models are falling to momentum driven by hashtag, not fundamentals. Your headset crackles. It's Robinhood Ops calling, sounding urgent. They're revising deposit needs again, maybe $1.4 billion instead of $3.7 billion, only because they raised capital overnight. It's a reprieve, but not a redemption. They'll freeze buying. You know this because they need to cut risk exposure now. Buying halts begin. The room takes a collective breath. You lean back, weighted. The stale coffee tastes like cold dread. You type one last Slack note. Liquidity evaporating. Hedge Ops manual. Brace for volatility halts. Before hitting send, you close your eyes. You can already hear the opening bell. The market isn't broken. It's remaking itself now, and you are central to that moment. Voices in the war room grow taut. You watch the live feed. Robinhood's NSCC collateral jumped from $700 million to more than $3 billion overnight, then rises again to $3.7 billion by morning. That means buying restrictions are not political, they're procedural. Capital controls, not conspiracy. Citadel isn't directing them. You just provide the plumbing. But you know how quickly optics warp in public perception. An encrypted Zoom window pops open on your board screen labeled Crisis Ops Robinhood Ops Team. The operator's tone is even. Collateral requirements triggered. We might not clear if purchases continue. She doesn't mention Citadel, but she doesn't need to. You enter silent game theory, offer your broken risk engine as explanation, not blame. Publicly, it must look like regulatory necessity. Internally, it feels like drowning at the edge of a tank. The war room lead steps in with calm urgency. We're outlining request templates for capital injection, but they're burning time. You sit tight as Robinhood's COO Vlad Tenev speaks, words clipped across static. We will restrict buying due to regulatory ceiling. The line clicks silent. No fanfare, yet it hits you like lightning. This will define headlines. Your screen shuffled to half-screen red alerts. They froze buying midday. You lean forward as a new alert pings. Internal pipeline shows pooled buy orders off Robinhood now dropping 90% because buying stopped, while sell orders continue. The surge becomes asymmetrical liquidity drain. The crowd keeps screaming tickets upward in public. But on the Citadel side, flow flips. Principled models say send limit orders. Internal operations say pause liquidity until clarity. The cooling tension shifts into risk management funeral. Meanwhile, the war room lead quickens updates. Robinhood has capital raised overnight. Trading may resume if capital window extends, but exposure is capped. It's not the same as a freeze, but functionally it is. Reddit explodes again. Robinhood broke the system. Politics chimes in. AOC tweets about fairness. Portnoy posts memes. You log internal chatter. We heard it was regulatory cap. Store ridicule will say otherwise. You open a private channel for Citadel leadership. We didn't order the halt, but we processed billions of flow today. Timeline implications matter. You feel each word with precise weight. Public perception works like pressure in a vessel, unseen, unstoppable. In your ear, a compliance agent's voice chimes. SCOC command wants PR talking points ready. We supported system norms, not halted order flow. The flow dashboard flashes again. Buy volume via Robinhood dropped 95%, yet fills continue through other channels, though at lower speed. Choose your adventure. Risk begins. Do you throttle or trust partial fills? Every impact model now notes orders executed in partial dark pools, partial exchanges, speed slower by 30%. That's operational failure and fast-moving volatility. You taste it. A salty failure overshadowing billions of dollars. Your phone vibrates with a message from risk headquarters. Prepare statement. Citadel had no direct control over halt. Risk-based flow instruction only. But you don't type, you pause. Everything you say now can become soundbite. The narrative war is already on thin ice. You're no longer a risk manager. You're a gatekeeper of optics. External data flips again. Robinhood's app flashes meaningless buys, but those route through Citadel, and circuit breakers flicker in algorithmic notes. Every tick-up is suspect. The rumor mill is loud. You breathe deep. Remembering night runs through futures. Friable logic. Ephemeral clarity. Today it's clear. You trade order, but you weigh identity. At 10:30 a.m., stark internal warnings appear. If buy restrictions last past 15 minutes, ticker volatility crosses 145% intraday, systems fail final checks. Data on screen is screaming. Hat tip. Retail closed hundreds of thousands of GME accounts today. Borrow capacity collapsed again, yet resolution is still fluid. Public faces interpret it as retail versus Gotham. The room stills at 10:33 when Citadel leadership sends the phrase, "Prepare to present losses scenario to board by noon." You taste metal on your tongue. Framed this way, It's not just tech failure. It's financial billing on public outrage. You listen as phone lines light one after another. Sequoia, point 72. Top clients ask what now? Their inquiries leak cost and stress. The hand of politics brushed into finance. Throughout this calculation stress, you keep your voice steady. You recall that Citadel executives denied influence. Public testimony framed PFOF as conflict-free, compensation-based, not control-based. But you also know that models failed, narratives shifted instantly, and retail paused market depths. You feel it. The system doesn't need a villain. It needs a signal, a story. At 11 a.m., you exhale. All provisional action passed. Statement is ready. The halls outside the war room feel quieter. The tanks of finance stand still. Retail marketplace drama still roars somewhere outside, but within walls, the battle turned from systems to press. Now you brace for consequences, reputational reset, congressional cards in play, long-run liability spinning from memes. You stand slowly, step from your chair. You feel the weight of the newsroom lens awaiting afterward. The halt repositioned risk, not eliminated it. You realize you won't trade out of this day. You'll publish out of it. And the narrative will carry more weight than models ever could. Your phone vibrates. A single Slack channel pings. Hashtag Citadel rig trend volume greater than 100K within last 10 minutes. That's enough to trigger emergency PR escalation. Internal chatter compares it to GME trade volume spike. You realize, in this moment, the firm isn't just trading risk. It's bearing liability for perception. Your name, your firm, are now plot points in a worldwide narrative. Tweets stream across the dashboard. Alexandria Ocasio-Cortez demands hearings. Elon Musk tweets a picture of GME shares, hands wide. Barstool legend Portnoy posts, "This is war, fueling the frenzy." You reset channels. A compliance alert reads, "Limit public commentary until clearance." The outside world is noisier than the war room. You wonder, did Citadel become collateral for sentiment? Inside the war room, voices stay calm but tense. The COO summarizes. Media spike, political figures jumping in. User-generated clips exceed buffer thresholds. Your FlowOps desk flashes metrics. Target abandonment risk rising. Risk of stop-loss cascade. The hard truth is this. Retail volume didn't just break models. It dismantled narrative control. You are fighting optics, not just orders. A new Slack alert surfaces. SEC contact. Inquiries landing. Timeline and decision notes requested. Legal representatives frown over reminders to preserve docs. Nothing unsaid, nothing deleted. You feel a shift. This is no longer about operational performance. It's about accountability. You glance at a team member collecting Reddit screenshots and memes depicting Ken Griffin and Citadel as villains. Silence thickens. Meanwhile, the Flow dashboard shows a strange twist. While Robinhood halts reduce buy pressure by 95%, secondary brokers routing through Citadel still show smaller buys. Dark pool volume is oddly higher than expected. Someone in risk whispers, "They're splitting us. Punish the backbone." You flip to internal quotes processing. Settlement times extended. Latency worsening. Trade fills delayed. Retail attacks identity, not just institutions. Models once predicting market depth now show bids thinning at mid-price across all meme names. The screens note, GME borrow rates spike to 8%, a 400% jump from yesterday's 2%. Trading desks monitor. Short interest in GME still exceeds 140% of float. You wonder, how long until retail stops being risk and starts being narrative fuel? Models slide into second place. You hear the war room lead on talk. We didn't ask for this, but the story's out now. That phrase voices what you feel. Strategy can curve, reputation can break. You craft briefing material, timeline of exposure, chronology of risk ops, compliance steps taken. The war is over. The message is unambiguous. Citadel was not orchestrator, it was victim of chaos. File folders litter the digital board. Press Statement Draft 1. Congress hearing preparation. FAQs, why halt buying? You open Draft PR. Citadel supports fair markets, processes order flow, did not pressure Robinhood to stop trading. Every word resonates. Care and pain in equal measures. You save it under encrypted backup. If truth doesn't save you, precision might. You glance at your screens. The ticker across CNBC shows, story, Robinhood Citadel under fire. A banner displays live tweets calling for action. On Reddit, posts scream, "We broke the system, and no one saw it coming." You think quietly, institutional power without narrative control is atrophying. Citadel executed trades, but did it execute perception? Your phone pings again. Ken's office wants to quick call CEO in 30 minutes before press briefing. They'll want clarity, even if clarity betrays complexity. You realize, every internal log will be gone through, and every delay could be used as evidence of complicity. This isn't just about market rules anymore. It's about history's judgment. At 12:15 p.m., the room grows quiet. The team collectively breathes, then recalibrates. The PR lead reads out loud, mitigation timeline mapped, no further exposure, board to address PFOF policy. You know this won't fix perception, but the script is locked. If news wants to paint you antagonist, you'll be ready with order of events. You step out to a window overlooking the plaza. Lunch trucks line the street. Hustle continues, unaware. But within these Citadel walls, reality rewrote itself. Your role changed from actor to witness to fire control. This day will be in textbooks, not just for models broken, but narrative lost. You return to your desk and take a breath. Models will be updated. Policies will evolve, but nostalgia for control, that fades quietly. You open a blank page in your notebook and write, "Today the machine became myth. Wall Street became theater. The story outpaced structure." The line trembles with meaning. You rise and walk toward the midday briefing, every step heavier than the last. Red logs sync with analysis boards. You adjust your tie, your suit feels like armor. Outside, the world reacts in real time, but inside, the real drama has only grown. The system wasn't broken by trades, but by a moment when belief overwhelmed infrastructure. Silence fills the war room after the public storm. Screens now show margin numbers from internal hedges hemorrhaging. Citadel's internal hedging desk reports a gamma-neutral failure as forward volatility skew inverts across the board. Algorithms built for routine spreads collapse under this abnormal volatility. You sense models aren't adapting, they're unraveling. You look at the delta exposure sheet showing GME hedges being dynamically offset with short-dated options. The problem? Negative delta stocks are climbing so fast, short positions shift, meaning every nanosecond. Dark pool fills come through patched routing at slower speeds, each fill inching Citadel closer to risk that can't be hedged automatically. So you manually intervene, overriding fills mid-execution. This is survival hacking at scale. An analyst whispers, "We crossed the term sheet." You check the platform. GME borrow utilization now at 98%. Rates so high that every new borrow costs double yesterday's fees. The cost of holding shorts or managing excessive delta becomes punitive. The system demands more collateral. Margin calls cascade. Even internal hedges lose real money, not just bleed, but ledger-damaging errors. In the middle of this chaos, the market clears another batch of large sell orders, but the bid side is absent. Retailers hold, institutional desks blink. You study the order book. No volume on the bid side. Retail is literally making markets by refusing to sell. You slide the monitor over. The borrow desk says, "There's no fresh supply." Liquidity vanished in plain sight. You note, nowhere to unwind. A bulletin pops on Slack under Risk Ops. Dark pool abnormal spread profile flagged. Reserve 50% in contingency fund. That fund is not a crack in the structure. It's the crack widening. Your chest tightens as you see collateral drawn from other broker partners. Citadel is absorbing not just flow, but redemptive pressure for others. The implied loss isn't from failure to hedge. It's from failure to control narrative. You pace. Models once read market structure by daylight. Now, day feels new. You recall benchmarks. Retail flow share soared to nearly 47% of U.S. retail trading volume in this event. Your own firm executed most of it. You realize the burden of execution now doubles as public accountability. You note an alert. Trend shift in CrowdStrike versus GME correlates unusual retail cross-strategy flows. At 1:05 p.m., margin risk pings again. This time, an internal tool flags GME exposure exceeding Melvin Capital's remaining capacity by another $250 million if prices move only 10% more. You freeze. Citadel and Point72 had rescued Melvin with $2.75 billion days earlier. But Melvin's capacity is now thinner. Your firm's real risk isn't their future, it's reputation alongside exposure. The machine you feed executed billions via order flow, but money lost in hedges doesn't trigger headline risk. It just erodes the margin. PFOF is profit on paper until losses show up. You open reports and tally internal loss estimates, hundreds of millions in cross-hedged offset errors. Models sit idle. Humans intervene. Someone inside War Room says quietly, "We're absorbing more loss than a normal meltdown fund would hold." That's when you know this isn't about trading profits or losses anymore. It's about absorbing chaos. The silence thickens. Walls hold up monitors, but not morale. You breathe through it. You skim internal write-ups. Loss rate per GME tick ballparked at $5 million per dollar up move, corded into surreal scale. Market jargon falls away. You close your eyes and see it clearly. Models broke. Systems snapped, but illusions carried forward until they shattered. The meeting lead sets a new directive. No overlays, only essential solitary fills. No new exposure in high-volume names. That means your desks operate at half capacity. You navigate between risk paralysis and public necessity. Real-time decisions no analyst had rehearsed. The weight of choosing not to trade compounds. Over at PR, another alert pings. Loss figures leaked redacted. Market tech press asking for confirmation. You log your screen, soil prints loaded onto legal buffer. You fact-check timeline, every hedge reversed, every fill manual, every model paused. This is transparency under duress. At 1:45 p.m., you glance at GME chart. Price now just under $500. Borrow rate approaching double digits. Daily variance breaking records. Models say to stop. Systems say to pause. Humanity says to breathe and manage exposure. You step from your chair toward a window. You need perspective. Outside, midday Manhattan hums with unsolved normalcy. The distance between this assembled structural collapse and the uninvested commuter is palpable. Your phone pings. Internal invite. Board updates, starting in 15 minutes. You steal your face and turn back. You review the document in your hand. Loss absorbed by hedges. Attribution to PFOF flows. Mashed opt exposure. Contingency liquidity lines. Narrative risk. This document is not a forecast. It's admissions. You step into the next briefing, knowing the story will cover your head. But structures endure stronger when cracks are visible. You tap a final memo into risk ops. Loss will show up, but will be isolated to bots and liquidity desks. No structural implosion, but public fallout may exceed. Then you close it. Voice steady, eyes steady. The system faltered, but you're still breathing. The narrative may eclipse nuance, but numbers endure. You lean forward, check the time. 2 p.m. The war room quiets in cautious stead. Exposure control is manual. The system's wires feel frayed, but you remain. Grounded in procedure, slope toward containment. In the same breath, you know. This was no normal risk day. This was a contagion of belief, and you were part of the containment crew. The war room is unusually quiet after lunch. Most screens display internal risk figures and PR drafts. Suddenly, a Slack banner pings. SEC inquiry. Need full timeline and decision memos. Compliance voice murmurs. Window closes fast. Red labeling appears over chat logs flagged for potential public request. You push open the folder labeled Ken Griffin Testimony Materials. It's dated for February 18, 2021, weeks from today. But you know the preparation has begun. CCR reports and compliance logs are being compiled, annotated, and will be submitted. Your seat changes from risk operator to witness custodian. Your keyboard is now a record-keeping tool of institutional defense. Your next alert, congressional staff calling from House Financial Services Committee requesting confirmation that Citadel had no role in Robinhood's halt. Emails flood in from legal, seeking every word spoken that morning. Models can't explain politics. Spreadsheet excuses will replace narrative. You feel the weight of future testimony pressing inward before contact is even made. A murmur rises near the door. War room lead turns to staff and says softly, "No one replaces messages. Everything stays on record." He means no deletions, no editing, no hidden channels. The firm can't explain every tweet, but it can preserve proof of transparency. What can't be hidden will be shown. You taste fear, less of risk, more of reputation. You glance at a draft memo titled PFOF Mechanics Explained, Customer Flow versus Influence. It becomes your daily exercise. Parse public perception, detach from institutional mechanics. Draft paragraphs explain how Citadel Securities earns from PFOF, but doesn't use it to control broker behavior. The message is legal safe, fact complete. But you wonder, who will read past the sound bites? In the margins you scribble, retail volume share 47%. Collateral spike from $700 million to $3 billion caused Robinhood to restrict, not Citadel. You highlight borrow utilization numbers, latency logs, and hedge failure times. Each piece becomes a vector for board-level risk narrative. Today, risk metrics are weapons, and perception is the battlefield. Your phone buzzes again. Internal update from Ops. Robinhood raised $1 billion overnight. Capital buffer extends clearance window by 24 hours. It's more oxygen. But the SEC still wants exposure flow mapped for every retail contract executed. Buffer buys time, but regulators want names, dates, decision trees, logs. Your team readies binders. At 2:45 p.m., the War Room lead speaks. Ken Griffin will testify. Narrative is thread. We don't lead, but we defend. You know this means intense stakeholder prep for congressional hearings. All hands on documentation. Narratives are drafted, refined, sanitized. You watch your risk dashboard flicker with every hypothetical scenario. You breathe through it. You scan Twitter light content on a secondary screen. Someone tweets, "Citadel rigged a narrative freeze." Another posts, "Congress should subpoena their logs." Public folklore is forming. You realize your firm's narrative isn't just about numbers. It's fighting mythology. Risk transforms into legend. Compliance sends final note before board briefing. We've provided full logs. We complied with inquiry requests. No edits. It's both reassuring and terrifying. That means later testimony will hinge on word-for-word records. No paraphrase, no spin. The silent specifics matter. Every lack, every gap becomes bullet fodder. At 3 p.m. your update timer hits and you brief leadership again. The chatter is no longer about hedge ratios or borrow costs. It's about narrative flow and board impact. The anger on Reddit and politicians, chant sequences overshadow moment-to-moment volatility. You realize Citadel's exposure now includes the court of public opinion. You step out into the hallway and take a moment at the window facing Manhattan. The streets below carry on, people lunch, traffic pulses. Nothing reveals the chaos in your spreadsheets. But you carry that tension inward, sealed behind polished glass. Risk was liquid. Reputation is not. You re-enter the war room. Screens switch to live testimony prep decks. You finalize slides on operational timelines, call notes, NSCC escalation sequences. Each bullet point is edged with legal vetting. This isn't strategy, it's autobiography. Today you document what cannot be undone. Your next alert pings. Polling on GameStop investors favor retail. Sentiment dropping on institutions by 18%. That means message control matters. Institutions bleed on numbers. Public bleeds on trust. You calculate risk anew. This isn't just about PFOF or borrow. It's about existential licensure in the digital age. You breathe deep and close your notepad. The meeting continues. Models no longer dominate. Narrative does. Power isn't just in liquidity. It's in how you explain its absence. You look up, meet eyes with your lead. They already know. The system survived, but trust didn't. And tomorrow starts the recount. The trading floor empties. Chairs are pushed back. Screens fade into standby. But you stay. You are the last desk lit. It's quiet in here. Macabre even. Your screen still glows with live charts. GME at $520. Sell orders tapering. But the real chaos has moved to compliance logs and press pipelines. A Slack thread labeled Night Ops flickers into life. Robinhood raised $1 billion overnight. NYSE pre-market flow might spike. You read again. Capital buffer extends 24 hours. The relief is temporary. Exposure remains fractured. You sense the night will demand the same vigilance as the day, but with darker stakes. Your phone pings. PR snippet approved for release at 6 p.m., titled Citadel Statement. Compliance transparency reaffirmed. You open it, read through carefully. No mention of Malin Capital or Reddit, just facts, decontextualized, sanitized. You copy and paste it into the scheduled channel. Click send. Risk becomes story. You glance at Reddit again, through an internal block, but see screenshots leak on encrypted staff communication. We broke the system. Citadel made Robinhood freeze. Political threads like #Robinhoodlist and #CitadelConspiracy dominate. Your internal PR team is preparing FAQs. Define PFOF. Explain no halt control. Address why Citadel profits ultimately. Each one reads innocent. Sentiment calls them lies. Internal risk channel flashes with new alerts. GME derivative counterparty exposures flagged. Extended settlement window in approval. You realize this won't just impact intraday risk. Multi-day exposure stacking upward erodes margin. Buffer funds are recalculated. The models you overrode earlier now feel vindicated, but silent. At 4:15 p.m., a compliance alert pings. SEC request docuphase, timeline for PFOF negotiations with Robinhood. You breathe. That means internal emails, call logs, notes, everything becomes deliverable. You recall the convo with Vlad Tenev, knowing your side makes no definitive request. Now the log is data, narrative becomes evidence. Your desk phone rings. It's from Melvin Capital's risk lead. Thanks for coverage. How bad will this be once we unwind? You respond calmly. Depends how quickly capital flows. Models broke, manual fills only. I'll update morning report. They say, keep pressure steady. Your heart sinks, not with alarm, but with recognition. Sister risks persist, reputations ripple outward. Panting through the day, the screens shift to investor relations dashboards. In one window, picture of GME meme montage turned historical record. Another, poll results on public trust in retail brokers versus hedge funds. Numbers read, 38% trust retail, 15% trust institutions. You stare. Profit margins are beatable. Trust once lost is a slow-burning loss of its own. You open a draft note titled Settlement Day Recommendation. It recommends swift exit, scaled liquidations, and stop-loss triggers overriding algos. It quietly decommissions high-risk brokers in favor of stable flow routes. The message is simple. Exposure must shrink, even if market is volatile. You finalize and send to your desk heads. At 5 p.m., the board meeting begins. Citadel's top tier convenes for a briefing, exposure summary, hedge loss assessment, public sentiment control, narrative variables. Your prepared slide deck walks them through collateral shifts, regulatory noise, narrative burnout. Every bullet point is fact-checked, every timeline anchored. This is no longer prevention. This is legacy formation. You step outside briefly into the lobby at 5:28 p.m. The evening skyline is stunning. Lights turning on in skyscrapers like silent watchers. Downstairs, cleaning crews move furniture, oblivious to the day's historic friction inside. In your chest is weariness, not weakness. The network you manage functioned, survived, but adaptability feels brittle now. You return to your terminal. You close internal chat channels. You shut off the historical trade tape feed. Archives will capture it. You sip cold coffee off a tumbler, stained with stress. The ticker still glows. You log one final memo. Day survived. Exposure contained. Narrative open. With that, you email the night desk lead, I'm out. They'll call if anything else breaks tonight. You rise, remove your jacket, and pause by your desk. The war room door behind you stands open but empty. You slowed the pivot. Regular markets resume in hours. But tonight, you remain changed. The arena hasn't regained calm. It's silent only because you've paused the narrative thread, and the morning will resume whether you do or not. You step into the elevator as doors close slowly. The building hum dissipates. As you step onto the silent sidewalk, the city breathes normally again. The headlines await tomorrow. The system survived, for now. But as you walk toward home, the city lights feel sharper than before, and you realize resilience isn't just about surviving collapse. It's about learning to live after the machines start to wobble. The boardroom sits silent once more. Presentation's done. A final slide flickers. Next steps: T+1 settlements, PFOF structural review, narrative distancing. You watch faces flicker between fatigue and resolve. The system held, but the system changed. Now, the issue is enduring relevance, not just intraday exposure. A strategist begins. DTCC proposing T+1 settlement in part due to meme stock volatility. That's half a win and half an admission. The system must compress time to avoid recurring chaos. Public scrutiny isn't satisfied with profits or survival. It wants procedures rewritten, models yield to mandates. One analyst states quietly, Robinhood's app users vote trust lower by 25%. Why? Institutional trust down by 15%. You recall customers who traded through you once with confidence. Now they're cautionary headlines. Survival tethered metrics on screen, but perception looms. The loss isn't red ink, it's confidence crusted over time. Your phone vibrates with a memo labeled SEC Rule Review, Order Routing Transparency. Regulators consider banning PFOF or capping it. Citadel's routing dominance, handling nearly 47% of retail volume, becomes controversy, not engineering. Institutions allowed efficiency. Now outcomes dictate oversight. Narrative has become regulation. You quietly tap a message to the ops team. Archive all logs, no deletions. Prepare for 606 public disclosures. Today's anecdotal evidence may find permanent record in SEC hearings. Data from the NSCC spike, collateral jumps, and commuter trading halts will surface in transcripts. Preparation becomes preservation. A senior colleague stirs. Playbook rewritten overnight. Old hedge paradigms suspect. You nod. The day moved beyond historical precedent. Risk becomes legacy. Hedge funds once demanded tight spreads. Now they demand public narrative control. You learn. Surviving institutionally demands moral clarity as much as data integrity. An external alert pings on the compliance feed. Congress schedules follow-up hearing in 30 days on meme stock events. The message is explicit. Retrospective accountability doesn't fade fast. Media channels are lining up sound bites. This isn't about triangles of volatility anymore. It's about public policy and storytelling. Citadel's fate is tied to what lies heard, not models seen. At 6:15 p.m., you pull up the scenario models. They show improved liquidity projections, but drop in public trust metrics. Wall Street firms that ride waves of trust now feel fragile. Real reform may emerge via legislation, not risk models. Correcting a trading system is easier than correcting a trust system. A compliance agent hands you a folder labeled Public Statement Q&A. Questions range from what is PFOF to did Citadel pressure Robinhood to each. Model answer: Citadel supported fair markets, never influenced broker decisions. These answers feel measured, but measured doesn't guarantee believed. The arc of internal integrity may wrestle with public skepticism. You glance at the chart one final time. GME settled near $480. Borrow rates normalize. Volume returns to average levels. Yet beneath the trading rhythms lies a reshaped ecosystem. Retail holds new power. institutions bear new scrutiny. Narratives persist long after tickers fade. You close your notebook. Notes include exposure contained, hedge losses absorbed, public trust diminished. You watch as professionals leave the room, some resigned, others contemplative. The day that survived tests doesn't grant peace. It only provides perspective and a dawning realization that tomorrow requires different tools. You stare at the wall clock as the boardroom clears. 7 p.m. Responsibility switches from risk operations to strategic reinvention. Models will reset, compliance will refine, communication teams will craft. But what remains? A system that breathed and paused, and leaders who felt its broken rhythm. You exit the office, lights flicking overhead. The building hums with after-hours stillness. You walk through empty halls, each step echoing. The war room remains behind you, darkened monitors sleeping. Walls that once pulsed with the day's chaotic energy now feel hollow, charged with narrative residue. Outside, the city remains awake, though your world dimmed. A news van glows across pavement. The national coverage continues. Citadel statements already playing in broadcast soundbites. Tomorrow's headlines have begun. You breathe in cool air, steady your heartbeat against residual adrenaline, and step beyond the door. You realize the institution survived, but its identity shifted. Today's crisis didn't just challenge capital, it rewrote the architecture of narrative control. Modeling frameworks recalibrate. But for individuals, the lesson is deeper. Transparency is transaction. Reputation is capital. You walk to your car, headlights casting long shadows. Your phone glows with messages of procedural review and transcript preparation. You pause, take one final breath, let it out slowly. Models rest overnight, but narratives awaken. As you drive away from the tower, the city's lights blur, flicker. You think, what's next is quieter, but harder. Future models will account for volatility, but will society rebuild trust? You know that numbers alone won't answer that question. Only decisions, documented and intact, hold true. You make it home before dark, but only just. The skyline looms behind you, still lit with the buzz of cable news segments and financial commentary. Inside your apartment, the silence hits like a wave. No screens, no tickers. Just the sound of your own breath. Slower now, unsure if the storm has passed or just paused. Your jacket drops onto the back of a chair, and you toe off your shoes without ceremony. The floor feels cold under your feet. Your body aches, not from motion but from tension, the kind that tightens your shoulders for 12 hours straight and doesn't let go even when you sit. You haven't checked your personal phone all day. You're almost afraid to. On the kitchen counter, a stack of unopened mail leans against a souvenir coffee mug. You glance at the date on the top envelope. It's still January, though it feels like a new season. The week has stretched time into something else entirely. You open the fridge, grab a bottle of water, and sit at the kitchen table with nothing but the hum of the appliance to keep you company. You check the time, 7:52 p.m. CNBC is airing a retrospective already. How Reddit took on Wall Street. They have graphics now. Charts. Hero shots of avatars wearing sunglasses. It's already being turned into a story. One with protagonists and villains, even if the truth is messier. You worked all day to keep the structure from buckling. Now that effort is just background for a headline. You switch it off. You walk to the window and look down at the street below. People stroll past the deli. A couple laughs at something just beyond your view. The world didn't stop. Most people won't remember the timing of a collateral call or the shape of a gamma squeeze. But you will. Because for you, It wasn't a spectacle, it was a system, on the verge of snapping. You think about the moments that didn't make the news. The slumped shoulders at the night desk. The whisper about settlement windows. The Slack ping warning that a press statement might arrive before an answer does. The tightening of voices when someone mentioned the SEC. The way risk, real risk, no longer felt mathematical. It felt human, frail, prone to rumor and rage. You recall the phone call that came in just after 5, the one from Melvin's desk. There was no panic in his voice, just fatigue. Just a man watching his models fail him and trying to hold the line with what was left. You think about how close everything came to unraveling, and how many will never know how fragile it really was. Your eyes settle on your laptop, unopened since you walked in. You resist the urge to check futures, to look at dark pool volumes or after-hours filings. The system will move on, with or without you. You've earned one evening to reclaim yourself, to become someone without a terminal, just for a few hours. You pour a drink, not out of celebration, but to mark the shift. The fire is out. The air is thick with smoke. The rebuild begins tomorrow. You sit in your armchair, take a long breath, and close your eyes. Images flash behind your eyelids. The first spike on the GME chart, the disbelief. The blank expressions in the morning meeting. The internal memo, redacted before it even reached your inbox. The quiet moment in the boardroom when no one had anything left to say. The way the system, for all its complexity, came down to people making decisions in real time without a net. You think about how the story will be told. The internet will say, Reddit won. Congress will say, it was a failure of oversight. The media will say, it was a war between Main Street and Wall Street. And you'll say it was a day the models went silent and humans filled the gap. You'll remember what it felt like to sit at the eye of the storm, to answer for a firm you didn't control in a market no one understood, to keep trading even when every trade felt like a bet on something broken. You'll remember how the systems held, but you also remember they weren't built for this. And they'll say the fire is out. But you know better. The embers still glow beneath the surface, beneath the models, beneath the rules. You finish your drink and rise slowly. The city outside your window is calm. The air is cold but still. You turn off the lights and the room goes dark. Tomorrow you'll re-enter the world. You'll reset the dashboards. You'll draft new policies. You'll write down what happened. But tonight, you simply lie down. You close your eyes and let the stillness begin.